Hello. Today we're going to introduce and explain the changes to the Municipal Pension Plan for our general members. General members are members of the Municipal Pension Plan who are not police officers or firefighters. We will talk about the plan changes and how they affect members in different stages of their careers. The plan partners agreed to the changes in late 2020. Those plan partners are the Government of BC, the Union of BC Municipalities, and the Municipal Employees Pension Committee. The Municipal Pension Plan Board of Trustees approved the plan rule amendments in March, and the changes take effect January 1st of 2022. Let's look at what's changing, including how your pension is calculated, your contributions, and your choices at retirement. The value of your Municipal Pension Plan pension is based on a mathematical formula. Here is the formula before the changes. We will continue to use this formula for all service earned before January 1st, 2022. Built into this formula is a bridge benefit, paid to you until age 65. If you retire before age 65, the calculation of your pension for all your pre-2022 service will be your years of pensionable service times your highest average salary, the best 5 years of your career, times 2%. Your pensionable service is the amount of actual time you worked contributing to the plan. At age 65, the bridge drops off, which is shown by the 0.7%, leaving 1.3%. But it's not 1.3% times your entire highest average salary, it's 1.3% times your highest average salary up to the YMPE, the year's maximum pensionable earnings. That's an amount Canada Pension uses to determine how much we contribute to the Canada Pension Plan. So if you retire with a highest average salary that is greater than the previous year's YMPE, we will take 1.3% times your highest average salary up to the YMPE, plus 2% times your highest average salary over the YMPE, times your pensionable service. That becomes your after 65 or lifetime pension for all your pre-2022 service. Starting January 1st of 2022, pension benefits on future years of service will have the flat lifetime benefit accrual rate of 1.9% of members' highest average salary. This means the majority of members will receive a higher lifetime pension. Again, if you are retiring with service before and after the effective date of the change, your benefit will be calculated based on the previous benefit accrual rates on all service up to December 31st of 2021, and the 1.9% benefit accrual will be applied on all service after that date. There will be no bridge benefit on service earned after January 1st of 2022, but you will keep any bridge benefit you earned before January 1st of 2022. That means your pension calculation for any service before January 1st will include a bridge benefit. Contributions that were previously used to fund the bridge benefit will now go towards increasing members' lifetime pension. Later in the presentation, we will look at a couple of examples of members retiring early with service earned before and after January 1st of 2022. If you want to retire early, you may consider a temporary annuity. A temporary annuity allows you to take a monthly advance on your lifetime pension. This means you will receive additional income before age 65, but your lifetime pension will be permanently reduced as a result. The amount by which your pension is reduced is based on your age at retirement. The full temporary annuity option is equivalent to the maximum old age security amount available at the time you retire. The plan changes introduce two new options, a half and a quarter temporary annuity. The half and quarter options will be available January 1st of 2022. These smaller options result in a smaller reduction to your lifetime pension. The estimates for the new temporary annuity options will be available in the fall of 2021. Here are the three temporary annuity options. This shows the changes to the lifetime pension with the different temporary annuity options. Another change to the Municipal Pension Plan for general members is there is now a single contribution rate of 8.61%. This includes a contribution to the inflation adjustment account. If your salary is lower than the year's maximum pensionable earnings, you may have an increase in your contributions over the course of a year because your previous contribution rate of 8.5% is lower than the new rate of 8.61%. However, under the new formula, you will have an improved lifetime pension. Please note that the change may be small. For example, for a member earning $50,000 a year, the current contribution is about $163 per biweekly paycheck. Under the change, the contribution would be about $2 more per biweekly paycheck. If your salary is higher than the year's maximum pensionable earnings, you may have a decrease in your contributions over the course of a year, because your previous contribution rate of 10% is higher than the new rate. The decrease in your contribution means you might expect to see a little more take-home pay. The Rule of 90 determines eligibility for an unreduced pension if your age at retirement plus years of contributory service is at least 90, and you wish to retire before age 60. For example, if you started working at the age of 20 and worked for 35 years, you would meet the Rule of 90 if you retire at age 55, because 55 plus 35 years of service equals 90. Members who qualify for the Rule of 90 at their retirement date will continue to receive an unreduced pension for their service earned before January 1st of 2022. These members will have a reduction applied only to the pension based on the service earned after January 1st of 2022. It's important to note that all contributory service, including service you earn after 2022, will count in determining if you meet the Rule of 90 for an unreduced pension on service earned before January 1st of 2022. Please visit the Municipal Pension Plan website and click on Plan Changes to see videos with more information about the changes to the early retirement rules. Let's look at how eligibility for an unreduced pension is determined. We've already talked about how pensionable service, the amount of actual time worked, is used in the pension formula. The other kind of service your employer reports to us is contributory service. You earn a full month of contributory service for every month you make a contribution to the plan, or are deemed to have made a contribution. Contributory service is used to determine if your pension will be reduced and by how much. This table shows eligibility for an unreduced pension for service earned before January 1st of 2022. As mentioned before, notice that the Rule of 90 still applies for your pre-2022 service. Here you'll see eligibility for an unreduced pension for service earned on or after January 1st of 2022. If you retire before age 60, your reduction is 6.2% per year for every year until age 60. If you retire before age 65 and you have less than 2 years of service, your reduction is 5.2% per year for every year until age 65. If you retire partway through a year, early retirement reductions are prorated for that year. Your retirement is unreduced if you retire at age 60 or older with at least 2 years of contributory service, or you retire at age 65 with any amount of service. Increasing the reduction factor for early retirement before age 60 improves equity because the cost is not paid by members who cannot afford to retire early or don't want to. The savings from this helps fund the improvement to the lifetime benefit for the majority of members. Now let's look at 2 examples that include a bridge benefit and early retirement reductions. Here's an example of someone earning $65,000 a year, retiring at age 57 with 25 years of pensionable service. They have 7 years under the old rules and 18 years under the new rules. In the annual bridge benefit column, you can see the 2 different amounts which were calculated under the 2 different rules, prior to January 1st of 2022 and after. Then you have the total annual benefit including the bridge to age 65. You can see the 2 different amounts a retired member would receive under the old rules and the new rules. Beside that is the total annual benefit excluding the bridge after age 65, which is a higher amount under the new rules. This example shows someone earning $65,000 a year, retiring at 57, with 5 years of pensionable service. They have 2 years under the old rules and 3 years under the new rules. Again, you'll see their bridge benefit is calculated under the 2 different rules, and you get the amounts you see here under total annual benefit, including the bridge, and then total annual benefit excluding the bridge. Even with a relatively few years of service, you can see the lifetime monthly pension is higher under the new rules. The rules are also being changed to allow future surpluses in the plan to go towards two accounts that help everyone: the rate stabilization account and the inflation adjustment account. After each valuation, once any unfunded liabilities are satisfied, the surpluses will be shared equally between these two accounts. The inflation adjustment account further supports inflation protection for retired members. The rate stabilization account helps to reduce the likelihood of contribution rate increases for active members and employers. In other words, future surpluses will be used to benefit retired and active members. The plan changes also introduce a new retiree benefit trust to provide more flexibility in funding retiree group benefits. The trust will be funded by a specific proportion of employer contributions and by ongoing premiums from those who sign up for health coverage. A new structure is being set up to manage the trust. For members in their early career, the changes to the Municipal Pension Plan improve your pension benefit accrual, keep the contribution rate stable, and ensure long-term sustainability of the plan. It also improves equity among members. For members in their mid-career, the changes have no impact on service earned up to January 1st of 2022. The benefit accrual improvement means the majority of general members will receive a higher lifetime pension, and new temporary annuity options offer flexibility. For members in their late career, once again, there is no impact on service earned up to January 1st of 2022. The closer you are to retirement, the less these changes impact you. The changes improve the funding and administration of post-retirement group benefits by establishing a new retiree benefit trust. Things that aren't changing are your ability to buy service. Your pension is still being calculated based on your years of service and the average of your 5 highest years of salary. There is still a 35-year cap on contributions, so once you have 35 years of pensionable service, you will no longer contribute to the plan. Your highest average salary may still increase based on your earnings after you've reached 35 years, so while you won't accrue any more service after 35 years, you may still receive a benefit improvement from an increased highest average salary without needing to contribute. Remember to visit the Municipal Pension Plan website for more details about the plan changes. And don't forget to sign up for My Account. Just click on the My Account link and select Let's Get You Registered. After that, it's just 4 steps to sign up. Once you are registered for My Account, you can use the Personalized Pension Estimator to estimate future pension payments, review a breakdown of your pensionable service, contributory service, and pensionable salary, view your member's benefit statement, view and/or update your personal information, use the Purchase Cost Estimator to calculate the cost to buy service, securely send and receive messages through the Message Center, and apply for your pension online.